In this video, I'm going to show you how trading can make you a 4x in terms of your investment profits. I'm also going to give you some really helpful hints, tricks, and tips. A lot of effort, energy, and time went into this video. Please leave a like if you find the content helpful. Subscribe to become a member of our global family. We'd love to have you here. Let's run the numbers. Rule 138, all investors become traders every time they buy or sell. But Rule 600, traders are always taking profit. Now what does this actually mean? I'm going to give you a hypothetical example, but it does explain how percentages work, and this is really important to understand. When we look at that big sell-off in Bitcoin in November of 2022, when it came down about 28%, say that you bought, and this is hypothetical, you bought the bottom, you sold the top. This is very unlikely, but the concept is it does help you to understand percentages. So down nearly 28, up nearly 19, you can see that the up and down movements are really quite severe. So down 28, up nearly 19, down about 11, up nearly 49, down about 12, up a little over 18, down about 23, up over 58%. Let's look at the impact. If you had 10,000 and you bought at the lows, sold at the high in each green box, you would make a profit of $23,104, taking your 10,000 and growing it to 33,000, a little over 100. Not a bad effort, but if you had have bought 10,000 there and just held right on to the end of that peak as an investor, you would have made 10,000 profit. A lot of people say, is the bottom in? The question is, which bottom? Is it, for example, this one, that one, or the many that will follow? Instead of an investing 100.63% return, we get much better than that, 231%. And the annualized return on investment is always the thing that you should look at. It's nearly 2,000%. When we consider the buy and hold decision, over the span of 144 days, 10,000 turns into $20,064 because this is a 100.64% return. The annualized return on investment, which is the very, very important thing to look at, is around 500%. You can see the trading is about 2,000%. What does that mean? Trading is 4 times more effective at generating returns than investing with this particular slice of data. Please let me know in the comments, if you were investing in Bitcoin, did you actually sell up there? Did you buy down there? And if you bought down there, would you actually sell at all, or would you just keep on holding? There are 2 very different schools of thought, the retail mindset and the smart money mindset. Retail gets caught in this really vicious cycle. It's just full of stress and anxiety. It's full of anger and disappointment as well. It's just a really horrible place to be, and that defines exactly what Zone 1 and Zone 2 are. Zone 3 and Zone 4 are completely different. In Zone 3 and Zone 4, you subscribe to positive excellence. You're unemotional. When you get particular sell-offs inside the market, you say, about time, I'm getting on the right side of the percentage. You don't run out of the market, you run into the market. But you do so with knowledge, especially the knowledge of how percentages work. Many investors tend to get caught in the hold on for dear life wave, and they just keep on holding on because they're just uncertain where to dispose, where to get rid of what they got in the first place. Remember, it doesn't matter if you're an investor or a trader, you're in it for the percentages. And you cannot lock in a percentage if you hold on to it. It just becomes a paper percentage and therefore not real. It's really good to come back to this retail mindset. When the price comes down, people get into anxiety, denial, panic, capitulation. And generally at capitulation, they're selling. Then they hope that things will turn around. They need reinforcement, so they need the green to go up before they'll actually come back and enter. Traders aren't like this at all. Professional Zone 3 and Zone 4 traders, not Zone 1 and Zone 2 retail traders. There's a huge chasm of difference between these two, and it mainly comes down to mindset. Professional Zone 3 and Zone 4 traders have high levels of knowledge. They're actually buying on red. They're selling on green. They're getting into the right side of the percentage. They know the market's pulse because they look at all the tiers of charts, Tier 1, Tier 2, Tier 3. They understand the structure of what they're getting into. They know where smart money is buying and selling. They have guide rails. They know the price is reality. They don't try to force their will on the market. They know that the market will do whatever it wants to do. They just need to be synchronized. Time is limited for all of us. I'd like you to consider the possibility that you're offered two jobs. You can do either job, no problem. Job B is $25,000 per year and Job A is $100,000. Both have the same levels of responsibility. Please let me know which job that you would actually take. If you were currently not working and wanted to work and wanted to get a job, and these two were offered to you. Many people would say, Ken, it's a no-brainer. Of course I would go for Job A. It's $100,000 a year. That's so prestigious. The concept is like this. When we looked at the trading returns, they were 4 times the annualized rate of HODL investing returns. It's like getting a $100,000 a year job instead of that $25,000 a year job. But a lot of people would say, Ken, I don't want to do that because I'll pay more tax. That's like saying I only want a $25,000 a year job because I would pay more tax if I had a $100,000 a year job. This is the way that you should look at investing and trading. I can absolutely assure you that people on $100,000 a year would reject out of hand the $25,000 per year job. This is a really good way of looking at trading versus investing. Investing is good, no doubt about it, but trading is substantially better. And if you're an investor who knows how to trade, whoa, you have a superpower. In episode 985, Huge Returns, I explored how I did a trade on Unfi and the returns that came out of that. I've done 2 more trades since that video in a market that looks like this. The outcomes of those trades: invested just $500 lots and sold it, one for $529 here and one for $528. The total of $1,000 turned into roughly $1,060. We were talking before about the Bitcoin return on investment of an annualized ROI of 2,000%. Here you can see it's possible to do much larger annualized ROIs just within the span of 24 hours. And you can see these trades have been done in the last 24 hours. Please make sure you look at episode 949. As well as episode 950. They're really valuable videos. They will help you tremendously. It takes time to understand smart money rules, and don't time travel relates to the fact that opportunities are always resetting inside markets. If something happens, just dust yourself off, get back on the horse and start making those annualized ROIs. With that specific Unfi trade, I actually marked up the chart with the CTKS method, which gave me the guide rails to know where smart money was buying and selling. And you can see when you have this knowledge and when you understand the momentum inside the market, you can do incredibly well. It doesn't matter that price came down. It matters where investor attention is. Bitcoin is currently trading at $28,599. We see that we've lost a smart money support level here at $28,000, roughly 700. The next smart money buy area is down at $27,850 approximately. We could see more negative momentum inside the market, but if you're using the techniques and tricks inside the masterclass, you're really excited. As you can see with that trade I just showed you, you can make money no matter what color the market is. It's just easier to make it when it's green, but you can also make it when it's red. When it comes to the Tier 1 charts and Tier 2, please keep your eye on the US2, the US 10-year yield, the DXY, and the currencies. They'll give you a lot of forward guidance. Always do your three-dimensional risk management. Know what you will do with your entire portfolio or any specific trade. If things go wildly against you, go nowhere, or go wildly for you. Looking at Bitcoin Cash, we can see it's down 10%. A lot of people, if they were in Bitcoin Cash, of course, would say something like this: I should have gone back in time and sold it before it sold off. It's very important to be kind to yourself. Financial markets are incredibly complex and very volatile. It's quite natural for crypto to be all over the place and then just recover the next couple of days. But if you time travel, you're actually blaming yourself for something that you can't control. I develop KS zone analysis as a conceptual framework to help people to get out of Zone 1 and Zone 2 into Zone 3 and Zone 4. Before KS zone analysis, people were acting, but they were not quite sure what zone they were in. And everybody goes through these 4 phases. Well, they go through at least the first 2. If they survive in the market, they go to Zone 3 and Zone 4. And how do you survive? Through learning. In the red, you should learn. The don't time travel rule applies especially in Zone 1 and Zone 2. In Zone 3 and Zone 4, we just don't time travel. We don't care about it. We just say, that's the market. In Zone 1 and Zone 2, people are like light switches. They're all in or all out. They're not quite sure what to aim for because they're a little bit blindfolded, because they don't know the rules of financial markets. And there are many, many rules. And I look forward to sharing more with you as you progress through these videos. In Zone 3 and Zone 4, we understand that we layer into positions and layer out of positions as well. We're always seeking to get on the right side of the percentage, and we buy on red and sell on green, which is the exact opposite of what people do inside Zone 1 and Zone 2. They buy on green, they buy the hill and sell the valley. We do the exact opposite in Zone 3 and Zone 4. We buy the valley and sell the hill. Inside Zone 1 and Zone 2, people have a thing called negative excellence. This is literally survival instincts just kicking in through behavior. Unfortunately, Zone 1 and Zone 2 behaviors set yourself up for sustainable misery, conflict, unhappiness, and failure. It's very important to get out of Zone 1 and Zone 2 as quickly as possible. Don't time travel means that you're kind to yourself. You just realize that markets are inherently volatile, and you just have to move with the market. As you're kind to yourself, it means that you don't get as upset. Of course, it's always upset when things don't go your way, but with positive excellence, we just turn that into a rule. We learn from it. We learn to be better, stronger, faster, and more intelligent the next time. With negative excellence, people are stuck in the past. With positive excellence, people are hopeful for the future because they're becoming smarter, better, faster, and more intelligent because they're learning. That's video episode 985. Kate and I are so incredibly appreciative of you being here and sharing this time together. We have such an amazing global family. Kate and I just love reading your comments each and every day. These are comments from yesterday's video. If you have particular cryptos that you like trading, please let me know in the comments. Knowing where to buy and where to sell is incredibly important when you're trading. All traders and investors are paid by their synchronization. The market pulls the money together. The market pays you when you're in sync, and you end up paying the market when you're out of sync. A lot of people will be feeling out of sync with the market right now. That's why Kate and I spend more time to try to give you an edge in the markets. When you understand how to move with the markets, it's a game changer. These are some comments from yesterday, the day before yesterday's video. Thank you everybody for sharing, it's just beautiful. If you like the Positive Excellence videos, please let me know in the comments by saying something about Positive Excellence. And if you would like more videos on trading, please let me know by saying something about trading. Have a great day or night ahead, my friends. And Kate and I look forward to catching up with you again tomorrow. Bye for now.